How many properties are for sale or lease? What does it all mean? This morning, we're going to go through stock levels on the northern beaches. Good morning, everyone. Welcome to Morning Minutes. Myself, Michael Burgio, Josh Wapshott, episode 1704. What is happening with property stock levels? What does it mean if they're going up or down? Here to talk about it this morning. Josh, good morning. How are you?
Yeah, good, mate. How are you?
Good, thank you. So stock levels. Let's start with, so do you think it's relevant to know how, as buyers, as agents, overall, how many properties are on the market for sale, for lease at any given time, and why, if so?
Yeah, definitely. I mean, it goes back to the basics when it comes to price action, and that's supply and demand. So you've got 50% of the table of what you're looking at there with supply. So definitely important. Obviously, as supply increases, options increase for buyers. Generally means there's less competition on individual listings because of that choice. Demand levels on where there's less stock available, obviously there's more people fighting over the one property. So massive implications, stock levels, on where price action sits and transactions.
And I think that's a very good point. Like, yes, you look at overall stock levels, that's going to have, that's sort of like a macro view of it. All the northern beaches, sale and commercial. You may only be looking at 2-bedroom apartments in DY or single level houses in Cromer. Now, you can obviously get a lot tighter view. So I'll show this, like, to give you an idea, I've tracked since, let's see if I can go all the way back. Yep, there we go. Since 2016, just going off Real Commercial and realestate.com, I've tracked how many properties are for sale and for lease. I actually had the years prior, but we lost it when the computer got a virus. So that's very disappointing. I always mention, I'm very annoyed I lost that couple years data. But as you can see here, you've got for sale 220, for lease, and then it goes through where you see trends. And look, drops down to 110, and then you come on to the commercial market. And I'll tell you what stemmed, why I started tracking this was almost a bit of, not frustration, but we would have like our meetings internally and everyone would just throw around, oh, it's busy, stock's great, or it's tough out there, a lot of stock. And there was no sort of data to back it up. And maybe this is why I sort of love commercial property. It's all data and numbers. I liked, if I'm telling a client or colleagues, like, there's a lot more stock out there, I want to know the numbers. I want to say it was 500 last month and now it's 600. There's a 25% increase. That's where it's at. Because I kept always hearing like the same thing. And it's like, well, it can't always be up or like, so I was like, let's track it and get a good, and it's been great because especially when talking to owners out there about pricing for property, it really shows you the trends. Like, let's look at it the last 3 months to be as an example. Like, we've had some big shakeups with the proposed budget announcements, but let's have a look at residential. Is that wrong one? I think. Yeah, here it is. That's annoying.
While we were waiting for that to load, I think what probably brought up this conversation this morning was exactly one of those conversations amongst the team at the sales meeting. we generally go over stock there, and current levels around, I think, 755. Whereas over the last sort of 3 to 6 months, stock at a minimum has been towards that sort of 900 up to 1,000, 1,100 on market at one time. So I think based on what we're seeing in the market, it's probably Brazilian owners who can push through the difficult times and are looking to reposition any selling process in a more favourable market. Start to obviously see less come up for sale, and more of those sales are, because they need to move, whether it's job related, family related, or downsizes in the market. You'll generally see it's more of a need than a want in regards to seller behavior at the moment.
Yeah. And I think the last 123 days, when we put in the text, the amount of sale properties on the Northern Beaches has decreased from just under 1,000 to 750 properties. So what you can read into that, and that's basically post-budget, either a lot of people have, I don't want to say rushed to sell. A lot of properties have sold very quickly in the out view that things are going to be worse in 6 to 18 months. So just let's lock in a buyer now. You could also assume a lot of people have said, let's just sit and wait. Let's see, there's a lot of potential movements. And whenever there's instability in the market, it tends to hurt pricing, not help. So, but we have seen a bit of a decrease. Like we went through the new development that we're selling, a unit that just trade. Well, we had one sold through another agent at 1,260,000, and we had sold the level above for 1,375,000 a month ago, and the other level above had sold for like 1.5. So that's nearly $250,000 drop in the last 3 months for residential property, which is absolutely massive.
And those units, same floor plate essentially, weren't they as well? Like for like.
All three prices I just gave were all the same layout, which is insane. Like level 5, level 6, level 7, and the level 7 one sells for $250,000 cheaper. But in positive news, as you said, with supply and demand, it's almost like a seesaw up and down. With 25% of the market coming out, there's going to be less properties for buyers to choose. So as there's always buyers, regardless of any market, that are brought into the market because of death, divorce, disputes, and family growing, regardless of the market, good and bad, these families and people still need to buy a property. So right now is a great time compared to 3 months ago when there was 1,000 properties to choose from. Now, on the flip side, we got the rental market, which is a little bit of a shock. We were sort of like thinking, is these numbers correct? Because in the last 3 months, we've seen a 30% increase from 370 properties for lease to like 550 properties for lease. It's like 29%, which is a massive increase. Now, I just checked the 5 years prior. There's always an increase from March to June, July, maybe around 10%, not 30. Oh. So, Josh, what do you think's happened out there that having this data can see this trend? What do you think is the cause of this trend?
Yeah, we were speaking about this before. Like the only thing that makes sense in my mind is a move from owner occupiers into the rent vesting space. Now, obviously, having a tenant in place, contributing to that mortgage outgoing, you're going to find it cheaper to actually rent that out, rent where you want to live, than say living in the property and paying the mortgage itself. I think we're talking about a 2-bedroom unit, but what you're paying on a mortgage there, anywhere between, if you're borrowing $1 million, you're looking at anywhere between $6,000 to $7,000 a month on a P&I over 30 years. I mean, you've got houses that you could essentially rent at a cheaper rate than a 2-bedroom unit. I think
$4,000, $5,000 a month, you get a house.
Yeah. So I'm thinking like it has to be the only way. I mean, I don't see, and I'm definitely in the sale front up front, I've definitely seen investors, sort of vacate the market. I haven't had any investor really transact residentially with me over the last couple of weeks. So that's why I was a bit headspun. I'm like, are we sure this data is correct? And I think we've all anticipated since the budget that we expect rental to get tighter, more expensive. But yeah, it's a bit of a surprise, this one. What's your take on it, Burge?
There could be a combination of, with like taking into account just how tough it is financially out there for everyone, there may be a trend of people moving in with each other. So instead of having someone having two one-bedroom apartments, or boyfriend, girlfriend, quicker to move in together because everything is so expensive, you could be having a lot of kids moving back in with their parents. And that's because even if you're rent vesting, you're sort of putting one on, taking one off. So looking for an outcome where it's adding to the market. And one of the big things I can think of is kids moving back in with their parents, seniors moving in with their children, and basically what was previously two rental properties with a family, they're now only taking one to save funds. And another thing would be rents have gone up dramatically, so they are taking longer to lease, which then means more on the market. If everything leases in 7 days, and now it takes 21 days, that's going to pump those numbers up. So I think it could be a combination of everything we've said. But I definitely think, taking longer to lease because pricing is higher. Like strata fees have effectively doubled in the last, they've gone up 200% in the last 20 years. We did a morning minutes on that. Then you look at the negative gearing, you look at interest rates. Investors are hurting. Investors are not in the marketplace. So it's safe to say the rents they're going to be wanting for their assets are a lot higher than they would have been a few years ago. So I think it's a combination of all. And it'll be very, very interesting to see when we come into summer, where we typically get even more rental properties, if that holds true, or with all these budget proposals hurting investors even more, us on the ground seeing less of them in the marketplace, if we see that plummet again to under 300 properties for sale, which would be very interesting.
And because we are looking at the beaches data specifically, maybe we're seeing people leave the beaches in terms of people are moving a little bit further out for that affordability factor and transport in. I think that's probably another one. We sort of forget we're looking at the beaches individually, but that could be something where people start to move further inland and want to put that money towards holiday at the end of the year, a few extra groceries during the week, and it's like that at the moment. So wouldn't be surprised. And then another thing I wanted to note just on the sale front is, with a lot of the residential stock, go have a look on realestate.com. Majority of the stocks up north, sort of Bayview, Newport, Avalon. I mean, there's a massive amount of stock up there for sale, and I wouldn't be surprised if that took up sort of majority of 20 to 25% of the stock on realestate.com for residential housing. So, once you almost add that factor in, if you're looking from sort of, let's say, Warrawood, Narrabeen up towards Manly, you're probably more closer to 400 to 500 residential that's available. So I think that's important.
And those areas are more your holiday areas. So that's people's things are tougher. Your second property. So if your income's changed and expenses, having that second or third mortgage isn't really a luxury anymore. So we're seeing that come on the market.
Especially when you throw in land tax on top. Like I said, the poor old investor's hurting.
Well, that's the thing. Like before, you could have 2 properties, 3 properties without paying land tax. Now, just your family home is so expensive. You're getting hit with every asset you have.
Yeah.
Beautiful. I think that covers it. Stock levels. Yeah. It's interesting to follow. I always love to see the trends and what it all means. You can, as we've discussed, many, you can go down many paths, but it's good to know.
Yeah, definitely. Thanks, Burge. Thanks, guys.
Thanks,
Have a good
everyone.
day.
Cheers. Bye.
Bye.